What is going on, everybody, and welcome to bootcamp day number 9. Today we are going to be going over trends and how you can identify an uptrend versus a downtrend and how to use these to identify high probability setups. But real quick, as always, and this is literally my third time recording this video all the way through. The first time I messed up, my camera was way too large. It was literally like this the entire video. The second one messed up. So now we are attempting this for the third time. So definitely make sure you guys smash that like button because the dedication is real for this video. But as always, if you guys are still rocking with me, make sure to do your daily check-in down in the comments. Also, make sure you're subscribed to the channel with that bell notification on so you are notified every single time I upload a brand new video. But let's hop into this for the third time. Alrighty, so let's do this for the third time. Now, when trading, there's 3 different trends that price can be in: either an uptrend, a downtrend, or consolidation. So an uptrend is going to be when price is setting higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, so on and so forth. A downtrend is when price is setting lower lows, lower highs, lower lows, lower highs, lower lows, so on and so forth. Consolidation is when price is setting equal highs, equal lows, equal highs, equal lows, and so on and so forth. Now, when price is in an uptrend, remember we talked about how to use demand, support, or even Fibonacci to identify where this higher low could be to then catch the next leg up. We can also use supply, resistance, and Fibonacci to identify where these high points are going to be to then catch the next leg down into that higher low and potentially even lower. So we can use everything that has previously been discussed to identify where this point can be and this point, and we can identify trades on both sides. We're setting lower low, lower high, lower low, lower high. We can use Fibonacci, resistance, supply to identify where this point can be. We can also use demand, Fibonacci, and support to identify where this area could be. So we can identify bounces at these lower lows, but we can also identify rejects at these lower highs. Now, in order for trend to change, it needs to do 2 things. The very first thing most commonly that we are going to see is, first off, price will come down and it will set a higher low, but then what it will do is set a lower high. That is your first, price might end up changing trends, but this isn't enough confirmation to get short right then and there. What needs to happen is price needs to set a lower low for the trend to then be confirmed that it's going to be changing. So again, we have a higher low here, a lower high kind of hinting, okay, maybe trend's about to change. And then we get a lower low and price starts moving down. And then that's more than likely when we'll see our downtrend. Now, in order for a downtrend to change trends, is first, we're more than likely going to come up and set a lower high. But then after that, price will come down and set a higher low, pretty much hinting, hey, price might end up changing trend here. And then from there, to confirm the trend shift, we want to see a higher high. When we get the higher low and then the higher high above the previous lower high, that is what confirms the trend. And that is when we will more than likely start seeing an uptrend. So that is how trend changes are going to happen. In an uptrend, we need a lower low and a lower high to confirm that it's going to downtrend. In a downtrend, we need to have a higher high and a higher low to confirm trend shift. Now, in consolidation, this is typically where you want to avoid taking trades. But if consolidation happens at the top of an uptrend, it increases the likelihood that price is going to break to the upside. We want to wait for the actual break. But if price were uptrending and then it just went into consolidation, the odds favor that price will continue to break out to the upside. But in a downtrend, if this were to happen at the bottom of a downtrend, the odds then favor a downside move. Again, we want to wait for the actual break and confirmation. So if this is at the top of an uptrend, we want a breakout in confirmation. If this is at the bottom of a downtrend, we want a breakdown and confirmation. So that's uptrends and downtrends, how you can identify trend shifts as well as consolidation. So let's just go ahead and let's start looking at a monthly chart on SPY, because these trends can happen on multiple different time frames. So if we're looking at a monthly time frame on SPY, it's clearly in an uptrend. All price did was come down and set a higher low right here, which again, we talked in the Fibonacci class. If we take this low over here in 2020, all the way up to the all-time high, what did price hit? 50% retracement. The odds favor that more than likely price is going to come back up to this high and potentially set a new high in the coming years. Of course, I could be completely wrong, But typically when we see these higher lows, it's going to lead to a higher high, right? So just looking at the monthly time frame, we have a higher low and potentially a new higher high coming. If we go to a weekly time frame, looking back here, what do we see on the weekly time frame over here? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high. But then what do we notice? Price comes down and actually set a lower low first and then came up and set a lower high, which confirms, okay, price is more than likely going to downtrend. If you wanted to wait for the lower low, you ended up getting that right here. Price went on, lower low, lower high, lower low. Now, one thing I want to point out to you guys is during trends, you're going to have minor trends and you're going to have major trends. So again, lower low, lower high, lower low, lower high, lower low. But then if you were looking at the minor trend, you would see this as a higher high. But if we're looking at the major trend, here's our lower low, here's our lower high, here's our lower low, here's our lower high, and then here's another lower low. So again, in trends, we have minor trends and we have major trends. Now, as we see on over here, price comes up and it sets a lower high. But then from there, what happens? It sets a higher low, breaks above, higher high, pulls back, higher low, and now currently we're in higher high. Price is eventually going to pull back. Maybe it sets a higher low at the weekly 21 EMA. We'll have to wait and see. But as of now on the weekly time frame, price is in an uptrend. If we break it down to the daily time frame, price is still currently in an uptrend. As we see, we break above, higher high, higher low, higher high, higher low, higher low, equal highs right there. So pull back, higher low, and then higher high. And it could potentially be setting a higher low right now because price did just come down today and hit the 50 and 61.8% retracement that we've been talking about previously. So on the daily, we're in an uptrend, but I want you guys to notice something. When we break it down to a 4-hour time frame, what do we actually have now? Price is in a downtrend. So as we see, we get these lower highs right here. Price breaks down and sets a new lower low. Pulls back up, lower high, lower low, lower high, lower low, lower high, lower low. So we can get multiple different trends on multiple different time frames. If we go to a 1-hour time frame, what do we see? Same exact thing. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, if price comes up and starts breaking above these previous lower highs, more than likely it will come down, set a higher low, and then we'll start uptrending. Now, when you start combining all of these things together and understanding the overall trend, that is what can set up for high probability setups. But don't become so focused that you only trade what the higher time frame trend is, because you can also use smaller time frames such as the 5-minute or 15-minute to identify intraday setups as well. So because my bounce level today was down at this 445.3 on SPY, there wasn't much bounces that we could trade off of until we got down there. Well, if we look at the 5-minute time frame, we had a big old dump to the downside, consolidation. Then as price broke below the consolidation, you could have went short and been able to take this thing potentially all the way down into the low. Had a nice little bear flag right there, pulled back up, lower high, and then as we see, lower low. If we head on over to Amazon today on the 15-minute, or actually you can see it on the 5-minute as well, I did take a nice short position on this earlier as well. We have this massive drop to the upside, pullback setting a lower high, get short, and then catch that lower low. But this video is going to be a little short. Again, I've already gone through it and edited it twice. So previously it was longer, but I do have something I have to do at 2 o'clock, which is literally in 1 minute. But I wanted to get this video uploaded for you guys, just breaking it down, uptrend, downtrend, consolidation, how to identify trend shifts, and how you can use these for high probability setups. Again, I'm very sorry, but I will make it up in a future video for you guys. As always, if you guys did find a lot of value in this, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me, especially because this was the 3rd time. Tomorrow, definitely make sure you guys are here at 7 p.m. Eastern time, because I am going to have a fire bootcamp video for you guys. Have an amazing rest of your day, and I will see you guys then.